that. I think a few bigger takeaways. One, this was really a performance, right? And his performance was, as a non-academic coming out in front as a press conference, how is he going to do? I think he did great, totally clear, totally the anti-Greenspan, if you like. The second piece I really took away was a commentary around asset prices. I think the Fed's thinking has shifted quite a lot. They shifted from asset prices being an example of success, higher is equal success, to now higher is a risk. And that's a big change.
Right. Okay. What are you going to do with this information investment-wise? Are you likely to, I mean, 3 is very different from 4 or 5. Is it full steam ahead in the markets for you?
I think that the Fed is more likely a source of volatility than support today. So I think 4 is more likely than 3. I think we'll get there. Maybe not the 5 or 6 you were predicting, but more. Maybe we'll even get to the point where we can raise rates without a press conference. That would be incredible. But more to the point, again, I think that the strike price for the Greenspan, Bernanke, Yellen, now Powell put on asset prices, the Powell put strike price is lower, for sure. I think they view financial assets as more of a risk today.
If there is anything that we can learn from history, is that rising interest rates equal to lower stock prices. We're officially at the foundation of the new era going forward of an increasing interest rate environment. It was plainly stated today by Jay Powell that the era of rising interest rates is right on the horizon. And the speed of interest rate hikes is going to be determined by the upcoming economic data. So, if higher interest rates mean lower stock prices, well, why aren't the markets falling by 500 or 1,000 points today? Well, everybody expected the interest rate hike today. However, any future unplanned rate hikes could definitely take the markets down. So what is the one significant data that's going to be revealed to us soon that could create panic in the market? And the answer is the job report on April 6th is going to be closely watched. And today is March 21st, so we're not far from April the 6th. That is officially when the stock market could really tank and produced significant losses. Now, in the past, I have actually produced a video and I posted it about the potential correction of market crash right around April 6th. Now, also looking back in history, when some of these announcements do come out and when some of the data is presented, sometimes markets do not react logically. And what we've seen is the past, there is such a thing as what I call a delay effect. And what I mean by a delay effect, although the rising interest rate environment has never been more clear, the markets are not dropping significantly, or at least not yet. The delay effect could officially postpone a significant drop in the market until April 6th. Or shortly after that, I would say within 2 weeks after April 6th. So you still got time to profit from the significant drop in the stock market that it will take place relatively soon. If you'd like to know how to do that, visit marketcrash.money. Find out all the possibilities of a market stock crash in 2018. Possible Bitcoin crash. More importantly, how you can take advantage of the upcoming crash before it takes advantage of you. If you've been potentially, or your financial resources been depleted in the crash of 2008, or maybe you have suffered some significant losses in the year of 2000 during the dot-com bubble, or maybe you remember things all the way back into 1987, and you're wondering, well, how do I avoid the same mistakes? How do I preserve my capital? How do I actually benefit from the market fall to where I'm not just protecting my resources and my capital? How do I actually profit? Because the truth is, if you look in the history, all fortunes, all significant fortunes were created in the stock market when the stock market reversed. And right now, we're faced with an opportunity of a lifetime when the markets are at all-time high, and they present an incredible opportunity of a trend reversal. So don't wait, take action now. And by the way, if you'd like to learn how similar exactly is the environment between 1987 crash, the pre-existing conditions, and compare it to the potential crash of 2018, visit one of the videos I just posted a couple of days ago that is titled Stock Market Crash 1987 versus Market Crash 2018. I believe you would be completely astounded by simple answers to key 11 questions and similarities between the environment in 1987 and the environment we're facing today in 2018. Again, if you're a new trader or an experienced trader looking to profit from this new market environment, because it has never been more clear that the environment is changing. We're exiting the environment, the period of the United States history where the interest rates have been artificially low for a significant amount of time, for many, many years. And now we're entering a new phase where interest rates are going to be continuously rising. So how do you profit? The same strategy has worked in the last 8, 9, 10 years is not going to be producing the same results. If you're looking for a new strategy, click right here, How to Profit. Schedule your consultation and take action now. Make 2018 your most profitable year.